see. I'm gonna check the YouTube video.
Says you're live. Let's see.
How does it? I just heard like a repeat sound, so. All right, looks like it's live. We'll go ahead and start recording the Zoom. Okay, so this is going to be pretty wacky. We're live streaming OBS, and at the same time, I'm going to be screen sharing with you all here.
Do you think you can handle it?
I don't know. Only one way to find out.
There's only one way. Charge on, my friend.
All right. Well, we can just get right into it. I think we have some other people who are going to be joining us in a little bit, but I also sent out the YouTube live link. Maybe I should put that in my here. Before we start, I'm gonna put that in my. I'm gonna put it in my Instagram link, and then.
Mm-hmm. Yeah, it's a good idea.
So we're gonna copy that YouTube link.
I'm going to share it on the LinkedIn page as well. I think there's there's 10 or 12 followers or something there.
Okay, cool. Going live right now. We're going to be talking about how to analyze the Hex blockchain. So go ahead and click the link in my bio. We'll be getting started here in just a minute. Going live right now. We're going to be talking about how to analyze the Hex blockchain. So go ahead and click the link in my bio. We'll be getting started here in just a minute. Going live right now. Link. So go ahead and let's make sure that YouTube link works, and then we'll get rocking and rolling. Okay, yeah, this is totally working. You're up and live. All right, cool. So yeah, thanks for coming back, y'all. Today I figured that since we've been talking about Hex so much, and a lot of what we've been talking about is mainly kind of like more like high level meta stuff and like some of the macro stuff. But I think today would be a good time to go in and actually look at all the data, because that's what's unique about these types of financial products is that like Hex is a smart contract, and because it's a smart contract, it runs on the Ethereum blockchain. And since it's on Ethereum, you actually have perfect access to all the information. And so a lot of people have been creating these data visualization sites just as like a way to like look at this information and make decisions on it. And so there's one today that we haven't really touched on much. We've talked about it a little bit, but with this one, it's called hex.vision. So, and this is like probably the most extensive like blockchain visualization tool that I've seen, like across any cryptocurrency. And so from this site, you can create all these different queries and all these different data visualizations, and you can really understand like where all the money is. And so this is why I think a lot of the FUD around Hex just hasn't really stood up to like analysis, because everything is so public and so easy to visualize that if there was funny business going on, it would have actually been revealed. Like it's not things can't happen really behind the scenes. And so, you know, I figure we can look at this site, figure out how to use it. It's pretty tough. I'm by no means an expert, but you can kind of follow along with some of the examples they already have, and we can, you know, start understanding how to, you know, what to look for, and how to like understand the different economics at play with like the staking, with the trading, and all that. So I'm gonna go ahead and share my screen. Let's get this set up. Desktop 2. I hope this works. Are you all seeing my screen right now?
Yeah.
Is it hex.vision?
Yep.
Okay, cool. Nice. I'm getting an error on the YouTube stream, but sometimes it just gets that. But oh well, we'll just carry on, and we'll repost if we need. Yeah, so I mean, so this is hex.vision. It's from the same, like when we look at the hex chart, we're looking at, we're usually on uniswap.hex.vision. So the creator of hex.vision, he made the chart that we look at. So, you know, we've already been using hex.vision, but we just haven't really used some of the more powerful tools that it has. So before we get started, let's just look at see what's going on in the hex price. So you can see here that we've been ranging in this area for, you know, for the last, how many days is that? Last, you know, 35 days, we've been in this like 25% range. So this is like what the way I'm looking at this is that, you know, we had this like big move to the upside, followed by like a big, you know, followed by a big like 60% retracement in these like two big waves. And what I'm seeing now is that like a lot of the sellers in this area have just run out of energy, because people that thought it would be a good deal to sell Hex, they've had 35 days to do it. And so, like, you know, just like as we, you know, kind of see this, like, you know, it's starting to move back to the upside. Just a lot of sellers are running out of money to sell with. They don't have any Hex left, that they're willing to sell at this price. So that's why we're seeing the price kind of move horizontally here, because although the sellers are starting to run out, the buyers are just starting now to get confidence that this downtrend is over and that it's time to start buying again. So that's like that common, like, you know, push, exhaustion, consolidation market cycle that we talked about the first time. We're seeing it play out pretty beautifully right here. You know, where we had the push, had this exhaustion, and then like before price can make another push, it needs to spend time just accumulating and like, you know, figuring out a price floor. So then, you know, if a lot of people, if the buyers decide that this is the bottom and the sellers decide that they're done selling here, this will probably be a really strong bottom for the next move to the upside to, you know, to power itself off of. Because I mean, you could kind of see that back here, where kind of see that back here. Let's turn on the. We're gonna have to zoom just because it pumped so hard. It totally messed with the scale. So, like, even in the past, you know, we had, you know, a big move to the upside, a full retracement, and then another, you know, whole month of moving sideways before price made its next leg up. Like, part of what enabled it to move up so much from here is that price spent so much time down here, and so it just had, you know, a solid foundation, so that when new buyers enter the market, they could just push the price up, because there were enough people like willing to buy at this point that those buy orders just like start stacking on top of each other, and then that's like what so like this sideways action, and you see it again right here. After the next move to the upside, there's a retrace, and then like a month of sideways. We're seeing like a third iteration of this cycle play out right now, where there's a big move up, big move down, and now we've been sideways for like a month. I'm expecting another move to the upside, just because the markets are definitely kind of turned on to these altcoins. Like you saw how on TikTok the other day, people pumped Dogecoin like 50%, just for like meme effect of everyone just piling on. And now that people are like definitely aware of cryptocurrencies, last time people were just like last bull cycle, people were just becoming aware, but now and moving forward, people are definitely aware. And so I think we're going to see a lot more like new money coming in. They've seen the full up and down. Now it's like they feel like they have another chance, and they already know about it. It's not like they have to first be taken from 0 to 1. Like now people are already at 1, and now they're ready to go to 10. And so I think that this is like a really good market structure for us to move up from. And so, yeah, like that's probably what's going to come on the horizon. Let's make a prediction here. I think that by from right now, I think that Hex is probably going to, in the next so I was wrong about the days. That was less than 34 days. I'm on the 4-hour chart, so divided by 3. So that was 10 days of sideways. I think we're actually going to go sideways for probably like another week or so. But then I think that we're going to come back up and retest this horizontal level over here at around 0.238 Ethereum. I think that Hex is going to make its way up here again over the next month.
Hey Brian,
yeah,
can you linger on why you think it's going to linger, why it's going to remain that sort of where it's at for the next week or so? Like what tells you that, I guess is what I'm asking.
Just because like here let's zoom out a little bit. Here, I'm going to go to the daily chart. So I usually think in days. So just like the time it spends within these areas, like it spent, let's see, like spent like 30 days going, 26 days going straight up. About 26 days going straight down. You know what? Price is pumping. Maybe we're in that later phase. So my mental calculation was a little bit off, but usually like things move up quickly and move down quickly, but then they move sideways for a long time. So like, this up move and the down move were about equal in length. And so we just passed that 26 day mark. But like when we even when we look at the Bitcoin chart, like when price is moving flat, like the longer it can stay that way, the better. And because it moved up so high, like the flat is still part of the down trend. Like when price is moving down, it's kind of equivalent to just moving flat. And because because like new buyers aren't pushing up the price, and so like the market enters these like periods of consolidation, and those usually last a pretty long time. Like let's look at the Bitcoin chart. Like when Bitcoin like had a massive move up, it had like a long move down, and then this long period of sideways movement. And so just that like when price has like a big move up and then like a big retrace, like just because how much that shocks the market, like that's like out of the ordinary like market activity. The market just needs to have time to like price that in, and so like because like people who would be like buying up here, they're recognizing that all the people that had bought up here and all the people that had bought up here are probably thinking of selling when price kind of re-enters that level. Like if it once it reaches back a little bit closer to where it was right here, all the people that bought here, like they're going to be looking to break even because they just sat through like a 40% downturn after they bought, and so like it stays sideways because like people who are like trying to re-enter or like start buying, they want to make sure that all the sellers are done selling, and so like because there's like all this time where people could have bought higher, all these people are just potential sellers, and so like the market can generally like trudge around down in this area because like there's effectively like 52 days of like people buying at like, or okay, so 52 minus, so whatever, however many days this is, so say it's like 45 days. There were 45 days where price was higher than today, and so the people that bought on those 45 days, though, that is potential sell pressure that could be entering the market. And so like as soon as like all the people are who were going to sell at a loss, the people who bought up here and are trying to cut their loss, like as soon as all those people that are going to sell in that fashion get like squeezed out, price can stay in this range because like new buyers are getting more confidence that like people don't want to sell for much lower than it is right now. But as the price moves up, people who had bought that are trying to cut a loss, they're like they're still in the market. So once they're done selling, once the people who bought up here are done selling, that's probably when we'll see another big move up, just because there won't be any resistance from these people. So usually that's why I think that like the sideways motion is usually pretty like it's going to be long, and there's probably going to be like kind of what we saw. I guess you can't see it on the ETH pair. There's something called capitulation. It's when like the last of all people. It's like when the people who bought up way at the top and then sell way at the bottom. It's usually like a last wick down before buyers like start like pushing the price, like before buyers quickly buy that up. And so like maybe this was capitulation, what happened like a couple weeks ago, where it's like this big push down and then bought up in a single 26% candle to the upside. Like all the people that sold down on these days just got, eaten back up, and then price kind of, went down to retest that level, and then it like has rebounded. So like maybe this is the capitulation, but what I'm hoping for is like another big wick down that gets eaten up really quickly, and then price comes back in its range. That'll be strong evidence that like, the last of the sellers are starting to lose energy, and that it's a good time to buy.
Yeah, thank you. That was helpful.
Yeah. So yeah, I mean, let's pump this price. I don't know. I bet in 21 days from now, okay, let's do a month out from today, 30 days from now, I think price is going to be up at this level. So that's our price call. We'll write it down. We'll see how correct we were. But I think that within the next 30 days, sellers are going to run out of energy, and then buyers are going to push it up, and then we won't see another wave of sellers until this previous peak right here. So I'm going to save this. We'll save a screenshot, and we'll see how close we were. Oh, hey, what's up, Solomon?
What up? What's going on?
Good to have you back.
Good to be here.
Yeah. Oh, what's up, Stan?
Hey.
You're talking Hex. So Solomon, I don't know how much you know about Hex, for other than from like the last one. So like, everyone else on the calls, they've they know a lot about it. We've talked a lot, but pretty much like Hex is another like cryptocurrency that's similar to Bitcoin, in that its main use case is just buying and holding it. It's like it's a coin that has a strong savings use case, and so that's why I really like it, because I think that those ones are just like good safe bets. If like the only reason people are buying is for savings, like for long-term holding, that usually helps push the price up. And so like I personally love Hex, and it's got some really awesome, just a really cool like technology ecosystem around it, from the like the way it's traded on these exchanges that you don't need an account, like you don't even have to sign up, to like all the data visualization tools that people just volunteers, like people that just like Hex have built. And so today we're just going to get into this site that lets you like dig into the like all the blockchain data for Hex, so you can like analyze the largest buyers, the people who are holding for the longest, like all these different things you can just like look at, because all the information is public. So that's what we're going to get into today. So yeah, thanks for hopping on. Yeah, so this is hex.vision. So someone named Firebun created it. He's on YouTube and on Twitter. He's just just a Hex guy, just someone who likes it. And that's what's really cool about like kind of what we were talking about last week, how a big difference in Bitcoin versus Hex is that Bitcoin's it's like its own network and its own protocol. And so that requires like a lot of constant development and improvement. Whereas Hex runs on top of Ethereum's blockchain. So all that Hex is a smart contract, and the code in that smart contract can never be changed. Once it was launched on December 1st, whatever the code is that was in there, that is Hex, and nothing can be built. And so people that are interested in Hex, they're not like the software engineers. They're not building stuff into Hex. They're building things around Hex. So some examples are like, someone built this site called hex.live, and it's kind of like your own personal wallet. So like you can paste in your Ethereum address that holds your Hex, and you have all this information about your hex. So here I was looking around on for some of the largest stakers. So I found this address where this person has 3.5 billion hex. It's like $12.5 million worth of hex. They're earning about 19% annual interest on this hex. And so like per month, this person's, account is increasing by, what's 19%? So 12 over 5. So like by $600,000, this person's 100%, 100% staked hex account is earning a massive amount of interest. Like this is the largest one, I think. I was trying to find the largest one. This person, they control, they have 7.39% of the time-weighted stakes. So it's as if this person is a Bitcoin miner that has 7% of all the mining power in the Bitcoin network. Like that's how you can think of this. Like when you look at this site, like so if you guys have Hex addresses, if you go to hex.live and then click profile, you can paste in your address, and then you can see like what percent of the total pool that you have, and that's like equivalent to being a Bitcoin miner. And so like this is just a massive holder that appears to have bought their hex. They first started staking here in March. So that was like right around the time of the big run up. But so like all this stuff is just like you can look at it for any account in Hex, and like and because it's so transparent, it just gives a lot of tools for you to like look at it, and then like one just like kind of like know that it's legit, because you can like prove that like things are the way that they should be, and then also like you can just get visibility into like other people's strategies. So that's what we'll be looking at today. Like hex.live is one of my favorite ones, and it's so people that like build sites like this in Bitcoin, you would have to like work your way up, and like it takes years and years for people to become competent enough and experienced in order to get their code submitted to the Bitcoin code base. But in Hex, like it's just like a lot more lightweight, and so like talented web developers can just build sites like this, and they're like massively useful. And like this is the type of thing that like helps support the price. Like a lot of the stuff that Bitcoin developers work on, though they like clear out like technical issues, but like that stuff doesn't necessarily like move the price up. That doesn't like help get new users. But in Hex, like a lot of the like development efforts go into things like this, which like help get new users, because like it's useful to have, it's good marketing. And so overall it's like it like because there's no development to do in Hex, you see some really awesome sites popping up in just a matter of months. Oh, Stan, I see it says that you raised your hand. You have a question? You want to say something?
Oh wow, that worked. Wow, that's actually a cool feature. Yeah, what type of website would you build? Like, what would be your master site?
What I'm the reason why we're gonna do a walkthrough of hex.vision is because I'm trying to figure out how I can build a trading terminal into the Dipcatcher site that will let me like do more than just like the price analysis. So some type of trading tool is what I want to build for Hex. So something like that just like helps you know when big stakes are ending, because when big stakes are ending, those people are they're highly likely to sell at some point. And so like knowing knowing when big stakes are ending, I want to be able to, just map that stuff out. So like, maybe some type of like visualization here that'll go on the dip catcher like trade hex page. Where right now I have like the chart and then the swap portal, but probably some type of some type of trading tool, or maybe like a dip catcher email algorithm, kind of like the Bitcoin one. That's what I want to do. Great question.
And another quick question: is there a finite amount of hex like Bitcoin, or is there unlimited supply? Or
no. So the hex supply it inflates at a constant 3.69% per year, and so we talked about this for like an hour on the last one. Where like in hex, the inflation it constantly inflates. But that inflation is paid to the stakers. And so for people who are above average length, above average size stakers, so people with long-term stakes, they accumulate a larger percentage of that inflation than the people who have short-term stakes. So for people who have above average length and time weighted stakes, from their perspective, the hex supply is deflationary because their balance is increasing at a faster rate than the total supply. But for people who are in that category of either not staking at all or they're below average length and size stakes, from their perspective, hex is inflationary.
But just to simplify the question, so is there a fixed supply or
No.
is there not?
No, it will always be increasing at 3.69%.
So I guess my next question, I feel like that is like one of the biggest points that you, or characteristics of Bitcoin that you say is very vital for it as a currency.
Mm-hmm.
Why is that not an issue with Hex?
One, because that's just like the rules of the game, and so you factor that into like the price you're willing to pay. And two, because like the purpose of Hex is like a financial product, whereas the purpose of Bitcoin is like a reserve settlement currency. Like the thing, and so and it's just part of like the the Bitcoin culture too. Like for the thing that Bitcoin is trying to fulfill, and the thing that Bitcoin should fulfill and is in best position to fulfill, a fixed supply is advantageous. Whereas in Hex, where it's like meant to be something that incentivizes long-term holding, it pays that through that inflation mechanism, where like from their perspective, it is deflationary. And so like it, just different purposes, and honestly, Hex really opened my mind to like, other forms of monetary policy besides just like, a fixed supply, like like where maybe before I like really understood Hex, maybe I would have thought that like, something that because Ethereum has a constantly inflating supply. It's kind of similar to Ethereum, in that sense. And maybe years ago I might have turned away from Hex because of that, but understanding that mechanism of like the total supply is inflationary, but from like some group of people's perspective it's deflationary, and the fact that it's like fully known and fully public too, that like the problem comes when the supply changes at a rate that's not predictable, whereas in Hex it's like like that's probably more important than the supply being fixed, is just that it's predictable. So that's kind of where my perspective had been updated. Because if it had a fully fixed supply, then like the interest paid for stakers, like where would that come from?
Thank you.
Yeah, and the supply of let's see if we can find some good data. That might be a good thing to just kind of kick off on this. So this site here, it shows all of the hex data. Let's try to find the supply numbers. Okay, so there is 297 billion hex, and about 55 million of that, or 55 billion of that hex is in a time lock. So about 20% of hex is staked, and 80% is on the market. I think a lot of that has to do with because people saw, like back here, I have some old screenshots that I'll try to find, but back here the proportion of staked hex to liquid hex was like opposite. It was like 80% staked, 20% liquid. Part of that was just because every day, like right now is a time of particularly high hex inflation, because the things that are contributing to, I'm gonna write these down. The things that are contributing to the hex supply right now, we have the like the launch auctions. So those are those daily auctions for about 500 million hex, 500 million freshly minted hex. I can't even get on without. Okay, we'll find this on hex.live. So like right now, like for every day, okay, so for the last 221 days, ending in 129 days, the like about 500 million hex are being minted and issued through this Ethereum auction. It's called the Adoption Amplifier. And so like right now, the daily supply of total hex is increasing at a rate of 0.5% per 24 hours. So if we look at, 0.5% times, what's the total, times 365. Like at today's current rate, the hex, projected out a year, the yearly inflation rate is 182%. And so part of that, big distribution of
and what's determining the rate of new hex?
So it's entirely based on how many people did the Bitcoin free claim. So remember when it was December, and then I posted that story about how if you had Bitcoin, how you could sign a message from your Bitcoin wallet and then claim. It was something like 20,000 hex per Bitcoin. It was a really small amount, but you could get a free claim. The amount of people that claim, that dictates how much hex is available in these auctions. So if 100, so right now, right now, 2.63% of all the Bitcoin that was eligible to claim, there was about 10 million or 9.24 million Bitcoin that were eligible to claim. It had to be a certain type of address that was able this was able to read. So just about half the Bitcoin was eligible. So out of the Bitcoin that was eligible to claim, 2.63% of the Bitcoin claimed. And so so at that rate of it's like 20,000 hex per Bitcoin. Every day, a portion of that, 20,000 times 9 million, a portion of that is made for sale through this auction. So every day that goes on where people don't do their free claim, new hex is left over that can be issued in this auction. And so
But wouldn't that mean that there is a fixed supply? Like if once that amount of hex runs out in that kind of system,
Yes.
is there a new system that's introduced or?
No. So once that happens, the constant 3.69% kicks off. So like it'll approach, like, so if we were to we'll try to generate this chart here in a little bit, like actually on the hex.vision. But this is actually an awesome question. This is a great question to kind of kick this off. But like pretty much what the hex supply chart is going to look like is something like this. So like during the first first year, the hex supply is increasing at like, I think it tapers off. So it probably looks something like, oh, this is the delay pretty bad for you guys, or is it just for me?
It's delayed, but it's not. I mean, it's not terrible.
Okay.
Yeah. All right.
So the the hex supply is gonna like kind of, I don't know the exact shape because I'll have to like look in the smart contract to see like exactly how the like, how that supply that's sold, that's like unclaimable from the Bitcoin holders. So like pretty much up to this point, this will be the like, so this vertical line is when the hex auctions end. From this point, the dailies, from there it'll be, well actually so when these auctions end, there's an event called Big Payday, and this is where like all the remaining hex that hasn't been sold and hasn't been claimed is distributed amongst all of the stakers. So during the first 15 years of hex, the inflation rate is going to be slightly higher than 3.69%. It'll probably be something like maybe like 5%. And I may be wrong with this. I haven't calculated this fully, but just because I know the dynamic of it, with like all these rewards are getting paid out to the stakers over this period of time. You'll have to look at the Hex site to like see like, what those are. It's pretty much like, all the people who have open stakes on the day that the adoption amplifier ends are eligible for these, like, so like all the remaining Hex is going to be distributed amongst the stakers based on how long and how much you've staked. So during like the 15 years that these stakers will be receiving that bonus, it's like an early adopter bonus. The inflation is probably going to be something like this. This is total estimate, but something like that. So like, kind of high, not as hot, like not as high as it was here. When you're looking at the slope of these lines, but after that, the inflation will be like fully at that 3.69% per year. And so the incentive that's in this structure is that if you want this inflation to be getting paid to you at a higher rate than the inflation is like dwindling your percent of the total, then you want to be part of the above average length stakers. So the average stake length is like 4.65 years. So like, if you want to be on the receiving end of the inflation, you want to have your average stake length be longer than this period. Because then when, the inflation is being paid, it's being paid to you. So from your perspective, the currency is deflationary. Because it doesn't matter what the unit is. Like, it doesn't matter how many hex you have. It matters what percent of the hex supply do you have. Like, you want that to be going up over time. And so that's the big incentive that's going to cause a lot of staking.
But wouldn't you, like, you getting the return on the inflation also increase the amount of hex and therefore your percentage of, or are you saying adding new money because essentially the inflation is offset of like the total hex? Like, could you clarify that?
Yeah, so it's like the inflation is where the stake rewards come from. So in Bitcoin, the miners are getting the inflation. All the new Bitcoin gets paid to the miners up until the fixed cap. But in Hex, the inflation, all the inflation gets paid to the stakers. And so, like, every single day, here, how can I view this? So every single, like right now, or we'll just estimate here, but if we have 297 billion, so 1, 2, 3, so million from here, 1, 2, 3, 1, 2, 3, times 0.005. Okay. This isn't totally accurate, but okay, that's not a good example. So like every day, like there's here, I'm gonna need to download MetaMask real quick, just so I can actually view that. But what we're about to look at is we're gonna look at the, like, where all the new inflation, where all the new, like today, where all the new hex came from. Because like right now the hex, like today the hex supply increased by, I think that's over 48 hours, that percent measurement, because it was twice as high as what I expected. But the hex supply increased by, something like 530 million hex. And so I just need to set this up so I can pull up the hex tool. Yeah, I mean, that's what's interesting about Hex, is that, like, it's inflationary to everybody but the people who have agreed to lock it up for the longest. So that's like the reward that they get, because in Bitcoin mining, the reward that you get for mining is you're getting that in exchange for providing network transaction security. You're helping make it impossible to make counterfeit Bitcoin. And that's what you get paid for. But those people are net sellers. People who are mining Bitcoin, they have to pay electrical costs up front. So when they get the Bitcoin, they're pretty active sellers. Whereas in Hex, the inflation goes to people that time lock. And by time locking, inflation rate cut in 129 days. And then in 5,700 days, we're going to see another one. And that will be interesting to see play out. But yeah, does anyone else have any? This is a great like thread of conversation, even before we kind of get into these. Does anyone else have any questions about the about like Hex Supply and like how that all works? Ty asked some really Ty kind of kicked off this train of thought because he asked me these like really complicated like questions about Hex, like comparing like if you were to start a stake today versus start, or if you were starting a stake every month, like a 10-year stake every month, like what would your like total payout be? Like all this stuff like that. And that gets into just like how the staking is allocated, because the way that it rewards people for staking longer and in greater amounts, it's through this thing called the share price, which we haven't even touched on. But that's just like how you know the percentage of the hex that you get. So like when, let's see if this will even show us. So when if you're in the go.hex.win like hex staking page, if you put in, it has like this little calculator here. So say you have 1 million hex, and you like, we can do a couple comparisons here. So if you stake for 100 days, the total number of shares that you're going to get is 100 trillion 0.635 shares. So these shares are, they're called stake shares. So all the inflation is paid to you based on how much of the stake shares that you own. And you get stake shares by staking Hex. And so what you'll see here is that like it's based on this thing called the share rate, and that's like how many hex you get per share, and this always increases, and that is to create the compound interest effect, where long-term, like where one 10-year stake will always pay out more than 10 consecutive 1-year stakes. This is just to like prevent like a bunch of short-term like stake turnover. It's to incentivize longer stakes. It's just how it's paid out. And so what you'll see is that like if you have 1 million hex and if you stake for 100 days, if you multiply your stake length by 10, your stake shares are going to increase by more than 10. Like you see that or not more than 10. Wait, let's see. Okay, here's where it comes from. It comes from, so these stake, like this is like what that share rate like kind of means. Like you're getting these, it's called longer pays better and bigger pays better. So you're effectively getting, it's like as if you have 549,000 extra hex in your stake. You don't actually have the hex, but those get contributed to your the amount of shares that you get. So like and it's always better to go longer than bigger. So if we went so let's just go back to 100 days, and we had, instead of going for, we're going to do like 2 million. like the amount that you'll get from a 2 million one is not as much as you would get from doubling the length of your stake. Like you'll always make more staking longer than staking more. And then there's like where those two lines would intersect is like there's like a point where it like that becomes true. But yeah, I mean that's just kind of the rule of thumb. That like the longer you stake, the more shares you get, and it has this like compound interest effect where you starting a stake earlier than someone like you're going to get a better rate than them, and that's just to prevent like short-term stakes from adding up to be more than long-term stakes. So that's kind of how that works. And you can see all the data here. So this site, hex.vision, the person who made it created all these dashboards. So you can see like commonly searched things. And so, okay, so like this is a cool example. So this is like all the stakes that are ending. And once it loads, we'll see a little bit more information. So like you see these, they're like some big peaks in the stake ending. So this first one is like the stakes that are ending the day after that, like the initial like inflation rate ends. This is because people who maybe don't believe in Hex that much, they wanted to stake the minimum length that they could in order to get the early adopter bonuses. So if you have a stake that's open on the day that the launch phase ends, you get bonuses. So this is like a minimum day where like if you end it the day before, you get way less than if you end it just on this day. So like the stakes are stacking up here. So about 6 billion hex is expiring right here. And you see some other like kind of big like peaks. A lot of them are coming like in these like year intervals. Like, all around like 11. So like that's in like December. This is like between November and December, because that's when it launched. That was the first day it was available. And because of that like compound interest effect, people that open up a stake, the earlier you open up a long stake, the better, because you're going to get a better rate compared to all the other people that have stakes ending on the same day yours ends. The earlier that you start, the more of that inflation that you get. And so like some people just like were going in like on the first day, they were just staking in these like year intervals, all centered around November, because that's when end of November is when it launched. So like you see those things kind of pop up on these like in these little peaks, and then you see a lot in this like 10-year period. Part of that is because when you like the max length stake is 5.555, but what's happening here is that these bonuses only like the big payday bonus, that's that thing we were talking about earlier, that only extends out for stake. Like you don't get any more of this big payday bonus by staking for 15 years than you do staking 10 years. So like a stake of 10 years gets the same big payday bonus as a stake for 11 years and 12 years. Those longer stakes get more shares and more of the inflation. But for the big payday bonus, you get like, it like tapers off at that 10-year period. And so you see a lot of these stakes expiring right around that 10-year period, because this is like where the maximum like number of like this is where like the maximum you could get from your stake. This is like the shortest stake you could get to get 100% of your big payday bonus. So you know, that's just part of like how people are like planning their stakes, you know, because like if you're not getting much more than just like more inflation from this, you know, you know, maybe you don't want to wait that next, you know, 5 years after you've already staked for 10 years. Maybe you don't want to wait. So that's kind of where you know, where another clump of these are. And then the next clump is like the 15-year max length stake. So like the people that did a max length stake on the first day, they like the amount of interest that they're going to get is going to be greater than any other 15-day stake ever, just because of the way that the share price and like that compounding thing works, and because there are more people staking now than before. Like on that first day, they're like, you know, we can actually look. Let's look at all of the stakes that opened up on that first day. And so there was like some like, you know, kind of like a rush to stake on that first day, because you would never have gotten a better rate. And so that's kind of where, you know, where like what you see play out here. So we're going to look at stake. I'm not really, so this site is hex.vision. You're going to have to play around with this, like just to get familiar with it. But what I'm going to try to show here is how you can look at all of the people that staked on the first day it was available. We're going to look at how much they staked. We're going to look at expected end. We'll look at Hex stake shares. Hex staked. Start. We're going to look at the start. And we're going to look at their address. Okay. So we got all those. So now we are going to look at, let's see. So stakes that where start, let's see, start is less, let's see, I think this has to be a, hold on, let's see. I am no expert on hex.vision, but we shall figure this out. Where start is less than, let's see, DC. Let's see if we just type it in the same format that the date in this other one. Failed to parse. Okay, so it needs to be epic milliseconds. So we need to look at UTC Time Converter. So we need to look at December 3rd, 2019, 11 p.m. PST. No, actually December 4th at 5 p.m. PST. Do you guys know what UTC time is? Or I'm not looking for UTC. I'm looking for Unix time. Do you guys know what Unix time is?
I do not.
It's the it's how computers keep track of time. It's because like things like months and dates and years and time are just like kind of wacky. This is actually measuring the number of seconds since January 1st, 1970.
Oh, interesting. Okay.
And so we are going to look at December. So we're going to look at everyone on December 4th, 2019 at 5 p.m. Okay. So we found that timestamp. Let's see if this works. If we make sure that the start is less than see if this works. Expand your time range. So let's pull back this one a day. Actually, you know what we can do? Here's what we can do. We can just get all of the from that date. This will be easier to. So from December 2nd through December 4th, we are just going to look at all of the stakes. Okay. Okay, so what we're seeing here is let's see. December 4th. Okay, what time zone is this? Let's just change this to December 5th so we can. I think we need to cap. I don't know if we're capturing the first full day. And maybe this one's okay. So from this group of people that had staked, let's see. It seems small. Let me try this other filter. My lag is killing me. Okay. That's okay. That's more like it. So between so the first stake was on 12/4 at midnight. Okay, so we're gonna just do December 4th. So from December 4th at midnight to December 5th at midnight. So this should capture all of the people that opened up a stake on day one.
Were you one of those individuals, Brian? Of course you were.
Yes, I was. Yep. Let's see if I can. Okay, so there's there's a lot of stakes on this first day, because it was like a race to stake, and because a lot of the stakes were. So here, let's hide the one. So there were stakes that were Bitcoin claims, and then there were stakes that weren't. So we are going to make it so is auto stake is here. Let's see what the auto stake is, and then we'll know what to filter. Okay, so is auto stake equals. So yeah, we're gonna do the ones that are not just like, because when you claim with Bitcoin, your hex was staked for a minimum of a year. So we're gonna look for ones where people deliberately staked on this day one. They refresh. Okay, yeah. So about 6,900 stakes were opened up on the first day. So many people opened up numerous stakes. So like you know, kind of how we saw on that previous stake chart, where there was. So here, let's just grab. Let's find someone who staked a lot. So we're just going to grab this random person, and we're going to look at their stake schedule. Just so we can see an example of like what somebody who's staking on the first day, what they were doing. Okay, so this person has about $24,000 worth of hex. It has earned him about $1,000 worth of interest so far. Their average stake is 1.86 years. So this is a shorter term staker. So you see how their stake is below this. From this person's perspective, hex is inflationary. You know, where they only have 0.007% of the total inflation is what goes to them. And so this person doesn't have very long stakes. I was hoping that the random person we'd grab would have a lot of long ones. But like, you know, see that this person on their first day, let's see, we can look at all their stakes. Okay, so this is like an early staker. So this person, for instance, in that first day, opened up 3 stakes. So like, you know, say the average let's go back to this other chart. So say the average person opened up 6 stakes. So there are probably about 1,000 at like unique addresses in here. Which, how do we visualize this? So here, let's do something else. Let's add a filter. We're going to look at all the people that did a max length stake on this first day. think I can do it with. Let's see. And what's the staked days? Hex staked. How do we figure this out? We might have to do some trial and error here. Hex stake is auto stake. Expected end. How can we do this? How can we do this? We're trying to look for the people whose max length stake is. Okay, we're just going to do greater than or equal to. How do we get the dates in here? Why don't we try Unix time again? Sometimes you just have to add zeros or take away zeros. So let's try so December 3rd, 2019 plus 5555 days. Oh, maybe it's stake days. Here, let's try, before we do that, let's staked days. Let's just do that. Yeah, okay, here we go. Stake days is 5555. Okay, so there were 114 people who on the first day Hex launched opened up a 5,555 day stake. And so
that's pretty cool to see.
So like 114 true believers that on that first day they bought Hex. So it didn't even, because we filtered out is auto stake is false. So auto stake was for the free claimers. So people that bought Hex.
So the people that are building these tools, I bet a lot of them are in that number.
Yeah, for sure. Like, or I mean, I don't know. Some people got like, so this site's been around since before the big pump. So there are people that were in it before the big pump, and then people after the big pump. Usually this site's been around for longer, so this person's probably in here somewhere. And yeah, and so like now let's do this. Let's find. So that's unique. So these are all separate stakes. So why don't we see how many of these are still open? So let's see what the Hex penalty is. This will tell us if there's a penalty on these. And if there's a penalty. Okay, this is awesome. Okay. So of the 114 people who are first day non-free claim max length stakers who still have their stake open is And hex penalty. Oh my gosh, this delay is atrocious. Okay, we're going to go backwards. We're going to see. Okay, so greater than 0. Or greater than 1. Greater than equal to 1. So if anyone got a 1 hex penalty, then they're not going to be counted here. So these people, these 6 out of the 114 max length stakers, they, let's see, they ended their stakes early. And so, let's see, let's look at hex, let's add hex stake and served days. So, oh my God, that's so funny. Oh my gosh. So these people gave into the FUD. Remember, like right around like New Year, Hex was, it's like lowest price. So this person right here staked 5,000 Hex. And after 30 days, where price was low, because on the first day, price was really high, just because so many people were buying in. Then after 30 days, like there were so many people calling Hex a scam. All these like famous Bitcoiners were like coming after it. The price was down to less than 1 Satoshi. This was like the bottom, the very bottom of the price. So this person probably was like, oh, okay, I'm out, whatever, this is a scam, I'm gonna get out. And so, I mean, luckily they didn't have very much. They had 5,000 Hex. But by ending their stake 29 out of the 5,500 days that they had originally committed to, they were penalized 3,300 Hex. So they've, like, because they ended their stake early, they were penalized, let's calculate it. They were penalized 66% of their Hex. And so like that's like really why you don't want to, like, if you start a stake, you got to be committed, because then your principal just like dwindles. Like you lose money that you time locked. So like for that person, they lost a lot. This person lost 76% of theirs because they ended on the first day. This person ended it after a week. They lost, what would that be? 18 over 25 is something like 3/4 of it. It's almost 75%. This person staked after 111 days. They missed out on, let's see. Oh my God. Wow, this is a great example. So if you wow, I'm gonna have to go look at like exactly how the penalties work. This person lost more than they put in. Wow. So like, these people, they got out before they should have, which sucks because from here price ran 2,000%. So those people are quitters. So only 6 out of the 114, like day one max length stakers, only 6 of them got out. So that's pretty good. Let's see who's less. This will give us all the other people. So these are the people still in the game. Okay, so there are actually 3 extra people that we didn't count in that first tally. So 9 people. Here, we'll just keep them in here. It's not that many, so we can just go back. So let's take a look at these. So 114. So what else should we look at this? Like, so we have this group. Like, what else might you be interested in like figuring out about these people? Like, someone give me something to like try to figure out from this group. Any suggestions, anyone? Okay, we're gonna look at all the people that staked over 1 million hex on this day. What do you think it's gonna be? Someone guess.
So these are the people that are still in it?
Yeah, so all the people that staked over 1 million on that first day for max length stake.
Less than 5. So I'm gonna say 5.
Let's see. You're probably gonna be right. It's gonna be, it may even be 0. I don't even know if there. Yeah, 1. So 1 hex whale staked over 1 million on day 1.
That's legit.
So let's go and see how much hex this guy has.
I do think being a hex whale, that's a really great adjective.
Yeah, that hex oligarchs. See, and like what I just love about doing this is that it is so like, because it's all on the blockchain, all this data is fully public, and so like it just provides like this layer of like transparency that like I feel more confident. It's so funny how backwards people are. Like people, like I think that people think that Hex feels kind of scammy because of the marketing and because of like the weird bonuses and like just like the way it's rolled out over a year, and like, you know, just like that whole process with like the free claim and then the auctions and the bonuses, like that just is just like so hard to wrap your mind around. So like when you first are like hear that, your walls go up. But like when I look at this stuff, like I feel such confidence in it because it's all public, and because it's like, you know, it's all there, and like there's no way to spoof it. So like, you know, between like, you know, the staking, like you have full transparency over, you know, what all the stakes are doing, and because all the trading happens on Uniswap, that's done on the blockchain too. So all the trades are fully visible. I think next time I think we may have to do this next week. Do actually go into like the Uniswap trades, because it's like a whole other can of worms. Like I've just started to be able to grapple with the Hex Vision like stake schedule one, but like the Uniswap one's a whole different beast, which we should spend time doing next week maybe. But like I just love how transparent it is, and you can like always just come in here and like look what's going on. So like this was the sole max length over 1 million staker. Oh wow, they did here. Let's see when all their stakes were. So on day 1, they opened up a bunch of stakes. So they have 15 stakes total. 3 million hex max length, 2 million hex, also max length. I don't know why they didn't register. Maybe they did it. I don't know. Who knows? Oh no, theirs is theirs was a week before, or no, day 3653. So okay, so they did a 15-year stake, a 10-year stake, a 5-year stake. Let's see. Let's just sort these by end. So I mean, so here we just look at the chart. They've got a bunch of stakes ending. So it appears they started all their stakes on the same day, on day one. So this is like a mega whale. This is like a person who, like, really believes in it.
So this guy's like a massive, like essentially he's mining, right? With like the same, he's not mining, but he controls, would you say he controls a large amount of the overall?
Oh no, so
pool?
this is a different guy. That one we were looking at earlier, they had like 7% of the shares. But this person is like, this person is in this category, so they don't own as much.
Okay, so I see the difference.
Yeah, so this person has 12 million hex. That other person had like 1 billion or something. So this person has 12 million hex that they got on the first day. And they have stakes, a bunch of short stakes ending like what appears to be every month throughout December of 2020 through September of 2025. It looks like they have stakes ending like every month during that period. Let's see if we can zoom in. So they have like like this is like just like one example of a staking strategy where you have a bunch of short-term stakes that are frequent and then a couple long massive stakes. So that's what they have. These are the ones we were looking at. There's that 3 million on the first day. There's that like 10-year. This is the 10-year one, and then they have another long one, and then these other like shorter big stakes too. So like, you can just look at it, and I think this is like really fascinating how like this type of site does not exist for Bitcoin or any other cryptocurrency. Like Hex truly has the best data visualization across anything because one has the most things to look at. You've got the price, and then you've also got the like the stakes, and so there's just like so much to look at. And you can always just learn something from this. So like what we saw is that like the people that joined on the first day, a very small number of those people gave up on it. Those people are still in it. And so here we just filtered out people that have greater than greater than 100,000 staked on this first day. So we have, how many is that? 7 people. And if we look at people that are above 50K, probably going to be more people. Yeah, so like you can just explore this stuff, which I think is really, really fascinating. And so I guess that's enough of looking at these stakes. Let's look at let's go to like the default ones. It's fine, and then we can kind of break off from there. What else should we look at? There's so much we can look at.
Hey Brian, so you mentioned earlier, and I just want to make sure I'm fully understanding. So the adoption amplifier, that's when you're getting your hex through the auction, right? Through you're minting it. Am I understanding that correctly?
Yeah, that's right.
Okay, awesome.
Yeah, and the site shows the difference. So some days the price you get on the adoption amplifier is cheaper than on Uniswap, but other times Uniswap is cheaper, and it doesn't become clear what the price is until the very end of each day. So like some days it's cheaper on Uniswap, some days it's cheaper there. I personally like early on I was doing the adoption amplifier, but I personally like Uniswap a lot better, just because like you can kind of like snipe a good price, whereas on the through the auction, you're not sure what the exchange rate that you're going to get is until after the day's over. So that's just what I like.
Another quick question I had for you. I tried to buy more ETH, excuse me, the other day on Wire, and each time I've had to call the bank, but this time it didn't go through. So I'm wondering if there's another way that I can try to.
Dan, did that happen to you too? Like Wire just stopped accepting. Like I had to talk to my bank. I got all the restrictions limited. No, I'm literally talking about $150, like not $150,000 or millions, right? Like, and Wire just won't work for me anymore. I ended up buying some ETH on Coinbase, but they gave me a 72-hour hold.
Yeah. What's is it? What is? How do you spell Wire?
WYRE.
Okay, is that separate from Wirecard, which was that like German bank?
I'm not exactly sure. I usually access it through the MetaMask wallet.
Mm-hmm.
Okay, got it.
That's how I found it.
Okay, yeah. I mean, I've never used Wire. Another thing you could do is just if you get some Bitcoin on Cash App, you can just send it to Kraken, trade it for ETH, and then send the ETH to your MetaMask.
Yes, good idea. Thank you for that.
Yeah, that's how I. And then like, because I mean the fee on Cash App is fine. The fee on Coinbase is all. I mean it's fine. Like if you want it instantly, you pay more of a fee on Coinbase. But yeah, I mean honestly, that's like in the margin of error. So don't worry too much about that fee. And if so just buying on Cash App is probably easiest. But yeah, I mean it's yeah, but that's all like that's where like kind of what we were talking about a couple weeks ago. That whole like getting into dollars from dollars in your bank account to Bitcoin. Like and this kind of touches on Daniel, what you're that person who asked you that question about like what's going to happen with regulation.
Yeah.
So like the regulation, it's not going to happen on the side of the blockchain. Like they can't regulate Bitcoin. If anything, like Bitcoin is going to be what regulates governments. Like the governments can't regulate Bitcoin, and some countries like may try to ban it, but it's just like very difficult to ban because you can't collect it. Like they were able to ban the use of gold in the United States because once you figured out someone still had it, you could go and arrest them and take the gold, and then now the government had it. Whereas like trying to round up all the people that have Bitcoin, the people who are already like in protest of government regulation continuing to use it, like the government's not going to be able to get their Bitcoin. So like it makes the ROI of enforcing that regulation smaller than it would be for like regulating other things. So one, it's just like difficult, like it's just not very like cost effective to regulate. But where they could try to regulate are the on-ramps to Bitcoin. So if they make it very difficult to get your dollars from your bank account, to an exchange that is going to sell to you, or if they don't let the kind of in the cannabis industry how the the companies can't have bank accounts. They could make it so that crypto exchanges can't have bank accounts. So like there are ways that they could try to limit there, but it's kind of a dual-edged sword because like one, if it becomes so big that the government feels a need to regulate it, like that's like by then governments will probably just like integrate it, and then like the people that have it will have the resources to protect themselves from the regulation. So maybe like houses in countries that don't try to regulate or jurisdict, because like there's it's called jurisdictional arbitrage. If the U.S. makes it impossible to open up a crypto related business, then that's opportunity for someone in another country to operate there, and so they could try to cut off the on ramps. That's why I'm pretty insensitive of price. I just want the Bitcoin because, like, I want the Bitcoin before Trump tries to make it, harder to buy. Because when it's harder to buy, there's a premium. Because the person who's selling it to you is taking on greater risk in order to sell it. And so, like, if they tried to regulate it, the price would just pump because it would be harder to sell and more risky to, harder and more risky to sell. And like the cost of like acquiring it is higher. So it's like that could be very favorable for the market, like the market price of Bitcoin. But it might be just, you may have to go and acquire it outside of like, the apps that you were used to. So I wouldn't be too worried about regulation because a lot of things have already been kind of like a lot of the groundwork has been laid through Supreme Court rulings. So like I think the use of Bitcoin is fully protected, and with some of the new laws, like is it like these types of laws would be state laws, unless there was like but there could be like a massive like overthrow of like the U.S. could be taken over by a dictator, and the Supreme Court and state laws like that could be a thing of the past, but probably the person who overthrows the U.S. government is probably going to be a major Bitcoin holder. Like, like it, because maybe someone who has a massive amount of Bitcoin has like, political ambition, and like in the act of their Bitcoin becoming like massively valuable, in that same act, like if there's like a massive like U.S. dollar currency collapse, or like a massive like U.S. government credit collapse, there could be like a power vacuum, and maybe that changes. But in that case, like if the person who takes over the government has a lot of Bitcoin, then they're probably not going to be trying to regulate it. So I don't know. I wouldn't be too worried about governments regulating Bitcoin. I would be worried about like you should not wait too long because like where they're going to cut it off is just like where you can buy it from.
Well, I was reading, I found a Forbes article on Twitter today that was just basically, the Rich Dad Poor Dad guy, the Robert Kiyosaki, or I think his name is.
Yeah.
He recommended Bitcoin today or whenever, but he talked about Bitcoin. But in that article, they mentioned Cash App and how the on-ramp, that being an on-ramp could be a challenge in the future. Like if they made it illegal, essentially, like those are the areas that would be hit.
Yeah, that definitely, like that's where, because that's where they have the authority and the capacity to like regulate. They can't stop transactions on the blockchain. They can't interfere with the issuance rate.
What about, okay, so Coinami, so if you have it in a wallet like that, is there ever a concern there, or like, should I make it a point to get the sort of like this, I forget what it was called, but you mentioned the Android phone and then like software with that last week.
Mm-hmm.
Should I like, obviously I want to move in that direction, but do you worry about like apps like wallets like Koinami or like a MetaMask or that hold them? Is that like getting them out or anything like that?
Could that ever be? That's actually a great question. I think those things would be very difficult to regulate and like very difficult to compromise. But maybe someone slips in some malicious software and then you have your auto upgrade turned on, and then maybe that's how they try to do it. Those like the wallet apps, they store the private keys like encrypted in your phone hardware. So like the app itself doesn't have it. The app can access it when you unlock the app. But yeah, I mean, like, there's, I guess, that risk of like, if they're able to co-opt the people who push the software upgrades and like push a version and then get people to update it, then like maybe that could be a risk. But as soon as that happens, like once it becomes obvious that it's happening, like there's no hiding that that's happening. And so people could like take steps to prevent that, so like I wouldn't be too worried about like just like having, like creating the wallet through that app, like through Koinami or anything.
Yep.
I'd be more worried about like it being the phone that you carry around day to day. If like someone came and like robbed you and like beat in your kneecaps until you unlock that app. Like that's why you don't, you like, if someone's gonna rob you, like the only thing they should take is your phone. Like, and like you shouldn't even be in a position where somebody could like, exploit, or extort you for it. Like
right.
You shouldn't be, like, for small amounts, like maybe like it's fine, but like that's kind of the point of using a device that's like always offline and only online when you're using the app software. Is that like, you're not like constantly like upgrading the like operating system and upgrading the apps, and it's something that like is separate from like your day-to-day device. So if like someone takes it from you or whatever, like they're like, if someone steals your phone, like they can't, they're more like, so you won't be locked out of like your way to get in. Because maybe like your phone gets stolen, and while your phone is getting stolen that has your private keys, there's a fire in your house, and where you wrote down your private key or your recovery phrase backup, maybe that gets lost in a fire, and like you're screwed there. So it's more just like for like separating it, so that like if someone was to extort you, they would have to, like, the amount of investment of time and money they would have to put into it should be just like, you want to always be increasing that. But yeah, I mean, I wouldn't be worried about like wallet apps as far as like government regulation. But
right on.
But that is a risk, like for sure.
What's that?
Like, just like, being that the apps have to come, like if you have an iPhone, the apps come from the App Store. And there's like curation there, and there's like laws there, and like, I mean, even with like Trust Wallet, it was the mobile wallet that I was recommending to use for Hex. One day I got notification that they had to turn off the DApp browser, so you couldn't use Uniswap anymore on mobile, because Apple has these like these money transmitter laws they have to abide by, and the DApp wallets are kind of this ambiguous like gray area of like what it is having a browser that enables you to interact with the blockchain. Like, does that make your app a money transmitter? That's like the kind of like the defining question of that. And so all of a sudden Trust Wallet got shut off, or I mean just the DApp browser got shut off. The wallet still works, but you can't do Uniswap, can't do hex staking, and so you just kind of have to figure out other solutions. But yeah, I mean the app stores are governed by U.S. law, and so maybe the answer to that, because it's always like a cat and mouse thing. If they start going for the app stores, then what that means is that you just have to go for things that are outside of that. So maybe that is setting up a wallet on, there's one called like My Ether wallet that you can set up a wallet on. That's separate from, you don't need an extension, all browser based, because the browsers are hard to wrangle in, or you'd have to move to maybe get a Linux computer. It's fully open source, and then you download a Linux based wallet. And if the app stores are seriously cracked down on, that make it impossible to get a wallet there, there's always going to be other solutions. But I wouldn't worry too much about that right now. You mainly want to protect yourself from losing your own Bitcoin. That's what you want.
Yeah. I definitely appreciate the approach, the cat and mouse aspect of the space. It's constant evolution. It's pretty cool to see.
Yeah, you always want to conceal yourself a little bit as best you can.
Well, hey, I'm gonna get off here. I'm about to eat some dinner.
Yeah,
but this was great. I appreciate it.
We can all wrap. And then, I guess, does anyone else have any other questions, or is everyone good to call it on this? And then I'll share these links, and then we can carry on from here. Is that good?
I think it's just us in here now. A couple of them sent some messages, so
okay, no problem. All right. Yeah, thanks so much for joining. Welcome back to California.
Yeah, definitely, man. This was great. I appreciate your time, just like always.
Yeah, this is great. But all right, I'll talk to you soon. I'm gonna end the streams, and until next time.
Cheers, man.
All right, thanks.
Take care.
See you later. All right, Zoom call is coming to an end. Stop recording, and we're gonna end.